Hello and welcome to Tax Matters. My name is Pearl Naimaka.
And I am Chiamaka Ohaochi.
Revenue House Abuja has been a beehive of activities lately. The executive chairman, FIRS, and his team have been receiving a stream of visitors. And on today's episode of the program, we want to tell you the stories of some of those visits as they all revolve around one aim: making Nigeria greater.
In the midst of this flurry of activities, we still found time to snatch an interview with the executive chairman. And this is what we begin today's episode of Tax Matters with.
Widely regarded as Africa's #1 taxman, Mr. Babatunde Fowler is the executive chairman, Federal Inland Revenue Service, and by virtue of that position, chairman of the Joint Tax Board of Nigeria. On the continental stage, Mr. Fowler is the chairman of ATAF, African Tax Administration Forum, and he's a member of the 25-member United Nations Committee of Tax Experts. Thank you for joining us on Tax Matters.
Thank you for having me.
There has been reports in recent weeks in the media that taxpayers' money in custody of the FIRS is missing. Is taxpayer money really missing?
Well, first of all, taxpayers' money is not in custody of the FIRS. All the money that we collect as tax revenue goes straight to the Central Bank of Nigeria, so nothing is missing.
What would you then say gave rise to these allegations?
Well, I think it was some people in the media, because some of my staff were being questioned by the FCC, got the wrong information and started blowing things out of proportion.
What are the internal control mechanisms in place within the FIRS to prevent the abuse of financial regulations?
Well, we've all had regulations in place. Everyone has an approval limit. We have budgets that are also approved. So these amounts that we're referring to were actually within our expenditure budget. The officers who approved them within their limits. However, they were not utilized as expected. And let me try and explain. When you go on an assignment outside your station, you're entitled to a duty to allowance. Your assignment might be for 5 days or for 4 days, depending on how long it is. However, if you go on a 4-day assignment and you spend 1 day, you're expected to come back and make a return and also make a refund. But some of these officers did not spend the whole time, and in fact, I'm not too sure, but based on the investigation report which I'll receive from the FCC, we'll now know exactly those officers who are liable and how much they're expected to pay back to the organization.
So we can take it from you that taxpayers' money is safe?
Taxpayers' money has always been safe. The FIRS is not a signatory to the CBN account where the taxpayers' money goes. And when the tax money is collected on a monthly basis, it's shared train FAC between the federal, state, and local governments.
Let's move on to other things. The service has a target of 8 trillion naira in 2019. What's the game plan?
Well, the game plan basically is to continue to discuss with stakeholders, and if need be, we'll carry out enforcement activities to make sure that those who are expected to pay. We'll continue to train our staff and continue to provide support.
They say morning shows the day. This is already May. How far have you gone?
Well, you've got to look at the levels of collection. If you compare the non-tax oil revenue for the first quarter, we're above by 11%. If you look at the PPT, which is the oil revenue, we're a bit lower in that sector, mainly because of the oil price and maybe the production levels. But we believe in the second quarter of the year, things should pick up. And as long as we don't have any distractions, I think we'll be in a position to carry out our duties a bit more diligently.
There's been so much talk in recent time as regards to the need to concentrate more on indirect taxes, and by indirect taxes I mean VAT, over corporate taxes and personal income taxes. What does the service have to say about this?
Well, for one, VAT is the fastest growing tax type worldwide. So certainly we will be concentrating on VAT. However, when it comes time to distribution, 85% of that goes to the state governments and local governments. But that aside, we will continue to expand the tax net and make sure that all those who are expected to be within are captured in the net. And we have recently received information from the central bank based on BVNs, and we think before the end of the second quarter, we should be able to grow the tax base from about 20 million to about 45 million.
There have also been calls to focus more on the informal sector, at least to formalize them. You're the chairman of the Joint Tax Board. What efforts have you made concerning this?
Well, let me put it this way. It's very difficult to formalize an informal sector. All over the world, every country, even the developed countries, have what we call the informal sector. What we intend to do is to get them into the net, let them get used to the idea of paying taxes, regardless of how small. If you have 10 million people from the informal sector paying even 10,000 naira or even 2,500 annually, that sort of adds up quite a bit.
We've received with pleasure the news of the new TIN system. When do we expect rollout?
It's ready. We have a training for members of state internal revenue services, and basically I believe it should be fully operational by next month. And what this basically does is it gives everybody who is in tax administration or in government the opportunity at the touch of a button to see the tax status of any individual or any corporate organization.
What is this supposed to deliver for the taxpayer?
For the taxpayer, it will make doing business across Nigeria more convenient. For example, if you reside in Kaduna and your tax clearance is issued in Kaduna and you have a transaction in another state, Lagos State or Ogun State, that state does not have to refer to Kaduna State for your information. That information will be made available at the touch of a button.
Substitution of account of taxpayers. What is all this about?
Well, what the tax law says is that if you do not file your accounts, then we have the right to use what we call a best of judgment. And over the last 2 years, we've had various meetings with stakeholders. We had a tax amnesty in 2016. We had the VADES in the following year. We also had interactive session with other stakeholders, compliance officers from banks, MAN, NECA, and all other relevant stakeholders that they should come forward. If they've even missed the opportunity of VADES, they should still come forward. A number of them didn't. Now, what the law empowers us to do is to appoint agents. So banks already are collecting agents, and now we expect them to put, when we say substitution, put a lien on defaulting taxpayers, those who don't have any tax ID, those who have tax IDs but have made no remittances, and that's basically what we're working on now. So currently we have over 50,000 of those accounts that have not paid any taxes, but have had banking turnover of a minimum of 100 million per year.
Okay. You're a member of the UN Committee of Tax Experts. What is that committee about?
Well, I'm one of the 25 they call us tax experts worldwide, and we talk about different issues of taxation. One of the main issues right now is how to tax the digitalized economy. We also talk about other things like transfer pricing, tax treaties, other relevant issues that pertain to taxation. But our main focus is how to improve tax revenue in developing countries.
Last year, you made a very important contribution on VAT on goods produced in industrialized countries but consumed in Africa. What is that debate about?
No, that is still what we call work in progress. It basically has to do with the digitalized economy to make sure that whatever we consume in Africa or in any developed country or even in developed countries or developing countries, that the tax portion or a portion of tax should be due to the sector or the region where consumption takes place.
When Thabo Mbeki was here in Nigeria, he made a presentation on illicit financial flows. How far have we gone in Africa to prevent this monster of illicit financial flows?
Well, there are various figures that are spoken about in terms of the loss. The Mbeki panel basically estimates $50 billion annually. I can talk about Nigeria. Nigeria has put in place a number of strategies. One of the major aspects where IFF constitutes a bulk amount has to do with transfer pricing. We have a special transfer pricing unit. One of our directors is also the second or the vice chairman for the OECD that pertains to these issues. So we're tutoring our staff and making sure that all companies within Nigeria that are supposed to file returns when it comes to transfer pricing do that as when due.
Okay. We're talking about Agenda 2063 for Africa to be able to internally generate revenue. How far has ATAF gone in this regard? Well,
ATAF basically provides courses which will improve tax administration within the African continent. The agenda basically says that we should be self-sufficient, that we should be able to fund our own programs, our own budgets without aid. My personal opinion is that developed countries will not continue to carry Africa until 2063. So I think we should be able to do that long before that. And I believe you can see the strides that we have made in Nigeria. At least for the last 3 years, the non-oil tax revenue has exceeded the oil tax revenue. And I think we'll continue to grow in that direction and make sure that we put all hands on deck, bring everyone to the tax net, make sure they pay the appropriate taxes as when due. And I think other African countries are thinking alike. Africa basically has so many natural resources, but the pricing of those resources continues to decline every year. And it is clear now that from the sale of resources, we can't fund our budgets. From the sale of resources, we cannot provide employment for all the citizens or the residents of Africa. We have to start to be productive or provide services that we can earn money from.
In 2018, a total of 5.320 trillion naira was collected as taxes by the Federal Inland Revenue Service, FIRS. This is the highest ever collected as federal taxes in Nigeria. Taxes have become an important source of revenue, enabling the government to provide greater infrastructural developments in our country. Tax revenues enable government to provide more roads, more railways, more bridges, more housing, more schools, more students in schools, more hospitals, more security, and generate more power. Because Nigeria deserves more. Only your taxes can make all our dreams come true. This message is from the Federal Inland Revenue Service, FIRS. It pays to pay your tax.
FIRS on the move.
Yes, indeed.
Now to those visits to Revenue House that we promised to share with you. We begin with the visit of the Honorable Minister of the Federal Capital Territory to Revenue House on Thursday, the 18th of April 2019. Mr. Babatunde Fala was on hand to receive the Honorable Minister and his delegation. The Executive Chairman began by going back in time on the relationship between the FIRS and the FCT.
In the year 2016, where we had a bit more of an aggressive drive, we were able to generate 38.6 billion. In the year 2017, it increased to 54.4 billion. However, in the year 2018, we were called, I think it was 2017, towards the end of the year, we were called by the Senate that directed that we should hands off the operations of the FCT. We tried to let them know that we have a cordial working relationship, and they gave us that directive. And considering we could not go against the directive of the Senate, we had to hands off. And that showed a drop from 54 billion to about 17.8 billion. We do have a very good working relationship with the FCT.
The FCT Minister, Malam Mohammed Bello, described the visit as basically a thank you visit.
Actually, today's courtesy visit is basically to come and thank you. Because most people don't know, but I've had a very close, quiet working relationship with you since you came on board, particularly as you tried to revolutionize tax administration at the federal level. just like you were able to do in Lagos. Basically, what you've done is a revolution, really. A revolution in terms of, widening the tax net, collecting something that was never collected.
Among other things, the Honorable Minister expressed concern over the seeming overlapping of the functions of the FRS and the FCT in matters relating to taxation of properties.
A number of citizens have complained to us, particularly with regards to information on their landed property, particularly undeveloped landed property, and the valuations attached to them. And of course, by extension, the estimated tax attached to those valuations. I don't know, the average layman will tell you that an asset that does not generate any income, probably shouldn't be taxed. At the level of the administration, we need to be educated why property tax should be collected by you instead of the FCT. These are issues that in our discussions sometimes it comes because our act, I think, allows us to do it. Then there is this issue of tenement rate. This, by extension, also applies to the relationship of the FCT administration with the area councils. I'm sure it's an issue that the Joint Tax Board is always confronted with, where you have the issue between the subnationals and the national entities.
In response to the minister's observation,
let me just clarify a few of the issues that you did highlight. We do not collect property tax. What the law says is that if a corporate organization does not file annual returns, we use turnover as a best of judgment tool. So the way we saw it, best of judgment can be used rightly or wrongly. If I wanted to give a best of judgment of 100 million to an organization without any formal thought process, maybe I didn't like the company, I'll say 100 million best of judgment. It's left for that taxpayer to defend. The next taxpayer on the same street, I might say 50 million. But you see, that would give the tax administrators the leeway to be more subjective. And any tax administrator that is given that opportunity will be tempted to maybe not do the right thing. So we looked at properties owned under corporate names, not individuals, and also bare land under corporate names that had not filed any taxes. And we used the estimated value of the property to give them an assessment. But they also have the right to object to that assessment and come back and pay. To date, in the FCT, we have generated about 4 billion taxes on some of the properties. About 35 of them claim not to own those properties, and we did refer those ones to ICPC. We had another 84, 85 that verbally claimed not to own the properties also, and we referred those ones also to ICPC. So basically, we just do an assessment on corporate ownership, not on the individuals. Where they have come and say they have bought it from a corporate organization and they're individuals, we actually do not assess them based on that rule of 6% of estimated turnover. So we don't deal with individuals. So we don't charge property tax. But we're also willing to share information. We signed an MOU with all the states and FCT to share information. So we have information on corporate organizations, for example, that have banking turnover, annual banking turnover of 100 million and above. The individuals have started coming in. To give you an idea of the type of impact it has, we have what you call the right of substitution, which means we can freeze those accounts. In the last 2 weeks, we've been able to generate about 500 million from about 126 accounts. We've frozen about 12,000 accounts, and we intend to freeze about 47,000. And we're dealing that with the bank. So as the individuals do come in, depending on the states where they reside, we will share the information with the states, the names of those individuals, so they can tax them accordingly for personal income tax.
You know, I kind of like the clarification on property tax.
Very timely. People were already becoming confused on this matter. There is no property tax in Nigeria. But when you build a mansion in the name of a company and the company is not known to the tax authorities as a compliant taxpayer, then you can expect the FIRS to ask questions. Next is the heartwarming news that, at long last, the nationwide taxpayer identification number registration system has come on stream.
On Monday, the 6th of May 2019, Mr. Fowler formally received the TIN registration system update from the Executive Secretary of the Joint Task Board, Chief Oseni Elama.
It is with great pleasure that I'm here this afternoon with members of the Technical Working Committee on the new tax identification number registration system, which you inaugurated sometime last month. On your assumption of office, one of the most critical success factor that you looked at was to expand the TIN tax base. At the time you came in, we barely had about 2 million taxpayers on our TIN registration database. And when you gave out the first assignment to collapse all the various silos of tax database with the various tax authority and also to integrate them, at the end of that exercise, we came to about 10.5 million taxpayers. By the time we finished the integration we're doing, at the end of last year, we had gotten up to 20.2 million taxpayers. But we had a challenge of being able to uniquely identify these taxpayers, and therefore it became imperative that we need to put a system in place that is automated, that can leverage on the various third-party agencies that are saddled with the responsibility of managing identity. The integration is to leverage on the Corporate Affairs Commission records, the bank verification number system, and also the National Identity Management Company. And we believe by the time the full integration is completed, we have a tax database that will be hovering over 45 million potential taxpayers in Nigeria. And we believe at the comfort of your home, potential taxpayers can register and get their tax identification number and also be able to print their tax identification registration certificate. And we believe that with all of this, the various revenue authorities will be able to meet and surpass the revenue targets that have been set, not only for this financial year, but in the near future. So I'd like to present here first the report of the Technical Working Committee, the assignment that was given. The report, Chairman. We've sent previous copies. Here is the detailed manual for the new TIN registration system, which we are prepared to launch very soon. And we put a program for the training for all tax officials throughout Nigeria.
Let me congratulate you for finishing this in record time. To the Nigerian people, what we now have is a consolidated tax database for all Nigerians and corporations across Nigeria. This will not only ease the process of tax payment, it will also ease the process of doing business. So if you do go to any other country, or you go to any other states within Nigeria, and they want to check your tax status, they'll get at the touch of a button. So for example, you want to have governor's consent in another state, Lagos, but you reside in Kaduna or Kano, and they want to check your tax status, they can do it at the touch of a button, and your documentation will be done if the issue has to do with tax.
On the same day that the JTB came calling, there were 3 other visits. There was a delegation from the Gambian Revenue Authority.
There was also a delegation from the Financial Literacy Technical Committee of the Securities and Exchange Commission.
And to round up the day, the Nigerian Financial Intelligence Unit NFIU came calling, seeking collaboration and cooperation with the FIRS. But because of time constraints, those stories will have to wait. Watch out for them.
Let's do this again next week on this same station, same day of the week, same time of the day. Thank you for watching.
Bye for now.